Nvidia is more than simply a chip manufacturer. It is the operating system of the future, including AI, the metaverse, and driverless cars. Nvidia is the key to these trillion-dollar markets. Folks, we're talking about a 50x potential. It's obvious, it's not a gamble. Up until now, Intel was essentially the mother of all contemporary computing, right? The CPU, in my opinion, was the most essential component that made local PCs, networking, and the internet possible. Using its market capitalization as an example, it is currently at $180 billion. You can probably calculate the economy it produced and supports in a trillion, 2 trillion, or perhaps 5 trillion. Let's just be incredibly giving, shall we? As a result, you may observe that there is a ratio between an economy's facilitator and its size, and that these factors are typically fixed and persistent. Microsoft's market capitalization is correlated with the economy it supports. Therefore, I wouldn't ask Nvidia whether it won't increase in the next 18 to 24 months. It most likely will for the very reason you mentioned. All of the algorithms that trade the press releases will push the price higher, and it is perfectly positioned to offer excellent meet and beat guidance for the street, which they will devour. All of this will just produce an upward trend. The more important question, in my opinion, is whether a market valuation of $4 or $5 trillion in the next 2 or 3 years will be able to sustain an economy worth $100 trillion. For such ratios to hold, you would have to believe that. If not, everything on the internet has just broken. Microsoft showed its adaptability and foresight by using its market leadership in OS systems to break into and dominate other software areas, including server software, enterprise solutions, and even entertainment with Xbox. In addition to diversifying its sources of income, this multi-pronged strategy solidified its position as a full-service technology supplier. Even if it was difficult to foresee them at the time, the Internet's history shows that if you build it, they will come. This means that if you invest in the capital assets required to power the next generation of applications, those applications will eventually be built. During the dot-com bubble and subsequent crisis in the late 1990s, there was a massive expansion of servers and other networking equipment, as well as a massive fiber rollout by all of the telecom firms. Additionally, the telecom businesses had a peak similar to that of Cisco. It was worse, since WCOM and many of them went bankrupt. The issue was that a lot of the construction was done with debt, which is why many of them failed when the dot-com bust hit and all the values came crashing down. Yes, Cisco wasn't in that situation. But my point is that everyone believed that these telecom giants had overinvested in fiber when the dot-com meltdown occurred in the early 2000s. In the end, all that fiber was put to use. Dial-up internet gave way to broadband, Applications such as social networking and streaming began to consume that bandwidth. The history of these things, in my opinion, is that if you construct the infrastructure to support them, the applications will eventually be written and built. As someone who is more of an application investor, I believe that the fascinating part about AI is that we are only beginning to see the vast amount of new ideas and applications that will be developed. Additionally, it will be B2B in addition to B2C that hasn't actually been brought up by you folks. These cloud data centers that are purchasing all of these GPUs are not only going to be used by customers and consumer applications, it will also involve enterprises. Businesses are utilizing AI, Google Cloud, and other technologies. Therefore, I believe there is yet a lot to come. We're only the start of a trend that will most likely continue for at least 10 years. Alright, so we're giving the NAS a little boost, as you can see. It's down around 1/3% today, but it's ripped a lot since Monday, a couple weeks ago. I bring it up because Bill Baru calls in to join us. Well, he's moving around in that area now, and in an interesting way. A few names have been removed, including Nvidia, Apple, Amazon, Google, and Meta. At the end is that synopsis. Would you mind explaining the rationale behind the removal of these mega-cap names? Yes, without a doubt. I came across several names and cut them all down to between 10% and 20%. Listen, following that significant volatility event, we have had 8 days in a row of positive trading. Following that event, I appeared on the show a few times to share all of the purchases I was making. However, 4 rate cuts that were priced in with a 63.7% likelihood also contributed to this rise. Well, last week's better-than-expected retail sales and better-than-expected unemployment numbers kind of contribute to this Friday's viewer pal. Furthermore, the Nasdaq just closed the gap between its previous closing and the earnings of Google, Alphabet, and Tesla. I'm just taking a step back and monetizing this move because I'm afraid that if Fed Chair Powell isn't too dovish, it would be interpreted as hawkish. There is a lot of resistance right now. As a result, I'm making a lot of these cuts to my top 5 stocks in my diversified portfolio: Synopsys, Apple, Amazon, Nvidia, and Alphabet. And I'm raising roughly 3% of the cash by more evenly allocating the names throughout the remainder of the portfolio. For the next few weeks, this affords me flexibility. Steve also mentioned that September is a volatile month, so I want to be prepared for that. We only own 10 names there, but we cut our largest stake, Meta, by around 24%. This was actually to cover Meta and our concentrated portfolio, which we trimmed overall. Right now, I have nothing against any of these names. The goal is to give people additional options in the upcoming weeks. Okay, so there may be some danger ahead. Let's see what transpires with your cherished stock. I'm going to advise you to purchase it with caution, Tyler. You have to wade into that water if you don't own it. The market's hottest spot is here. This stock will perform well as long as the competition to develop AI and the race to develop AI itself continue. Over the next 5 years, they still anticipate a 40% increase in this company's earnings. With this significant profits growth, it has decreased from 48 times earnings in 2024 to 34 times earnings in the following year. Well, it's done in a wonderful way. Well, it's a cyclical region. Even if it only has a few years left, I believe the AI momentum propelling those earnings will propel this stock to new heights, even at a $3 trillion market valuation. Therefore, I believe this is a dollar cost average if you wish to establish a position. In other words, I would like a position if this area were left empty. It can be a suitable risk for your portfolio, but it must be consistent with your investment philosophy and discipline and need not be a whole position. Consult your advisor. The first 50 customers receive 50% off anything in our store for a short period of time. This bargain won't last long, so don't pass it up. Hurry immediately to save a ton of money. Be among the first 50, so act quickly. Use the link below to shop right now. As requested, only grammatical errors were fixed.